let's start with a very simple question, very simple for you to answer. Should we sell in May and go away? And before you answer that, let's put in perspective. May we saw 6% growth. May is usually a good month, but 6% growth is insane. 6%, that's how much the market grew, right? So 6%, and it's the best May in 25 years. Going into June, which June is the worst performing month for stocks. And just to put in perspective, that worst performing month, I think, is 0.8%, because usually the market goes up. The market goes up constantly, right? Usually by 10% annually if you go back to 1920s. So it's not like every month is bad, but this is the worst month. So should you sell in May and go away? We're going to see a steep pullback this month.
I honestly think, I'm glad you brought that up, because I wanted to ask you this, and this is funny, we didn't even plan this. There are a lot of things that say, you do just because people say, hey, that's the way it's been done. So 60-40 allocation because that's the way it's been done. Mm-hmm. Forget that it was done one time for one generation. I don't know why everybody should do that forever. Frank, same thing, sell in May and go away. This is going back to the days of why our lazy bastards in politics take August off for recess, back in the day where they didn't have central air and all that kind of stuff. Now, you got all the technology, still don't work. My point is here with you, if you sell in May and go away, that's because all those big fat cats took off, went to the rich Hamptons and all that, right? Am I correct? Mm-hmm. And that was kind of typically like, hey, they take the summers off, so that's why they do it. Now, in a 24/7, nothing stops. Wouldn't you just throw that out? Isn't that just an old saying silly, or is Daniel Creech
a lot of things. Here? I mean, we say that a lot, especially when it comes to the markets, because everyone's like, well, history often repeats itself or at least rhymes, and that's total bullshit. It is. When you with the markets over the past 7-8 years, even since the credit crisis, when the Fed decided and the government decided to bail everyone out after all those failures, right? When the Fed decides to lower rates incredibly, where you're no longer allowed to have a recession, right? Where you say, oh, we usually have a recession every 4 to 5 years. No, not anymore, right? So when you have COVID and you shut off the market, and then I was looking at earnings. We're going to go over earnings later. But if you look at the end of 2020, we had the stock market at record highs and earnings at record highs. People forget that. They're like, holy shit, 2020 was bad. No, early 2020 was horrible. And then all of a sudden we got the vaccines out like November. The market took off. So we injected trillions into the market, which I get. I think it was $5 trillion. But then we injected another $7 trillion with every asset class at all-time highs other than gold. Almost every single asset class, right? Houses were at all-time highs. You look at collectibles all-time highs. You look at stock market all-time highs, right? Even cars, used car values, right? I mean, were higher than when you bought them, which is weird, right? It's supposed to be a depreciating asset. But it changed the landscape because you have the Fed, this gorilla in the room that could change the dynamics, just like Trump can change the dynamics in a second. So when you look at history in the markets, you have to learn to adapt because things are different now. It's not a level playing field. There's lots of things going on. Yes, you have 24/7 markets and stuff, and you have real-time stuff that you didn't have, and access to setting news in 1 second from here to China, and it'll be tradable in 30 seconds, right? So which you never had that before, before internet and stuff like that. So looking back, you could say, well, often this happens, but for me, when I'm looking at the markets, I don't really pay attention too much to that. So I wouldn't say, go away in June. I would look at it as May usually goes up, but it went up exceptionally much more than it usually does. So we might see a little bit of pullback in June. That's fair. But just because, if May went up 2%, you'd be saying the same thing. Should we, buy May and then go away? You're right. Like the dynamics are different. I don't really pay attention to that. It's kind of like the gold and silver ratio, which is kind of bullshit to me because it's meaningless. It's like was it 100 to 1 or whatever, and what they trade? It means nothing.
Meaningless if you want to get excited about silver prices.
No, but okay, you got exactly, based on that metric, you should have been buying silver for the last freaking 7-8 years, and you completely underperformed, right? You're basically just talking about a price of one and a price of another, two totally different metals. One's industrial, one has lots of uses, and the other one's used as a store of value. But yet they come up with this and saying, okay, based on this is supposed to happen. It's almost like saying, hey, when the stars align this way, this is what happens with stocks. So we should do that. When I look at stuff like this, I don't really pay attention to it. And like you said, I mean, now, with the markets and how busy and how crazy it is, and just everything is so much, it's so much news every day. Even today, we talk about Trump dominating the headlines, right? So you saying President Xi now has not held up his end of the bargain on tariffs. So will we see massive tariffs slapped on China again, which will be a complete disaster for many, many, many companies? And I got to tell you, over the past 2 months, 3 months even, I spoke to dozens and dozens of CEOs, companies of mid-sized, large-cap, small-cap companies, the disaster that they have gone through because of tariffs that you don't really realize. Like, imagine your whole supply chain of a business runs through China, and now it can no longer go through China. You have to upend it and say, okay, where we're going to go? Well, okay, let's go to Vietnam. Holy shit, wait, we're fighting with tariffs in Vietnam. Well, let's go to Taiwan. Wait, we have tariff fights with them all at the same time. So now they kind of said, okay, that they maybe that 100% exposure to China, now they have 30, 40%. Okay. Now, all of a sudden, China's back on, everything's good, right? According to a couple of weeks ago, and saying, hey, everything's good, we're going to come up with a trade deal. Fine. Now you have the certainty. Now, all of a sudden, if you backtrack here, what are these companies going to do? Like, the difficulty in these companies trying to figure out what Trump is doing, it's creating an uncertainty that could really push this market down 10, 15%. If he goes and says, hey, you know what, these tariffs are back on because China reneged or whatever. I mean, that's one thing. But, you know, just being in the market and saying, and the tweets coming out and saying, what do you say? She is, you know.
Very tough to make a deal with.
That's what he said. He's very tough to make a deal with, which we always knew, right? Because they always say they're going to do a deal and they don't. They say one thing and do another, right? And I got to tell you something. China better stop fucking around. If you look at the private gauge of China's construction, all right, from May, it's the Purchasing Managers Index. It came out today or yesterday. It came out yesterday and showed contraction, right? So just know below 50 is contraction. Showed contractions. That's the weakest print since September 2022. I don't know if you remember that time period, but the markets were crashing back then. So China's worse right now than that big crash that we had.
China's PMI.
China's PMI in 2022. So, and it's directly linked to tariffs, right? So now the tariffs are off, the next, gauge is probably going to be a little bit better maybe. But if they go back on this, I mean, she's playing with fire here. And yes, another tariff fight with China is going to hurt the U.S. equity market. It's going to create uncertainty. I get it. It's going to push China into a depression. You're going to lose everyone that's going in there. They need foreign capital to fuel that market. And right now you see foreign capital continue to exit that market. It was trying to get back into that market when you had a lot of hedge funds saying, hey, this massive stimulus plan, they've been announcing these stimulus plans for how long, and reserve requirement ratios, lowering them this way banks lend more and provide better lending and stuff like that. It hasn't worked because it doesn't work when you have just this depressionary environment. They're not dealing with inflation, they're dealing with deflation, which is a big difference. So no matter how much you stimulate the market, people just don't want to spend. And you could argue they're already in a deep recession right now. I mean, the property market and everything is still coming out horrible statistics. It's really, the context that I had, it's horrible. It's horrible. It's horrible. I would think they'd do anything they can to do a deal because their market went up once this was announced. Now to go back, I think China's really playing with fire. So let's see what Trump does. If he comes out like in the next day or two and says, hey, we're going back with 140% tax, you're going to see the market pull back probably 10%. You will. And I'd be careful with that.
And that's the scary thing because, this pause in the tariffs and while this negotiating, Frank, by the way, did you see the White House sent out a memo about, hey, give your best offer this Wednesday for trade deals to the other one? Nothing like knocking on your trading partner doors and be like, hey, get your crap together and send us your best deal. I would use that as a massive buying opportunity. And I will look into Creech's crystal ball here and be transparent. It makes me nervous to say that, which is probably why it's the right thing to do. Yeah. Unfortunately, and I am not happy about this, I'm simply telling you the way I see the world. You're always going to have fears and reasons not to invest. And yes, the tariff, if Trump says, hey, I'm bumping tariffs from 30 to 50, Frank's right, you're going to see a sell-off.
And it probably will be met with a buying opportunity. I think it's going to be a great buying
opportunity. Because China's not the only thing going around. And I'm not putting that argument in Frank's mouth or anybody else's. I'm simply saying just because the headlines are focusing on one thing does not stop this train, okay? You have to get a bill, the big beautiful bill or whatever it is through Congress, and they're going to be fighting and there are going to be changes and all that. The point is, if you don't get that through, Frank, the big tax increase goes through and a lot of negative stuff happens. I'm not happy about it, but we are essentially going down the exact same path that President Biden was going down, meaning it is a government spending like a drunken sailor fueled economy, and that is not slowing down at all right now. And until it does, the toughest trade, which is often the right one to make, Frank, is to be buying stocks and all this face of uncertainty. And if you need, and again, this isn't because Daniel Creech is right, but look at reality. How far are we off of all-time highs, Frank?
Yeah, almost there.
Holy cow.
Yeah, came right back.
And don't get me wrong, I'm surprised about that. I'm surprised about that, but that doesn't mean we haven't been buying into this market either. Yeah. I'm not trying to take it. I'm just simply saying, do not fight all the system and the tailwinds that are going. And, Ray Dalio's out on CNBC, and I love him calling it out, except for the fact that he acts like the Fed isn't going to step in and do all the same BS. Yeah. People, let's say the world changes. We are going through major changes. I'm not disputing that. Let's say the United States loses the world's reserve currency. Let's say we lose the largest global economy. That does not happen overnight. That is not a quick process. And the media makes you think like that could happen tomorrow or in June. And I'm just telling you, unless the military packs up and goes the Florida home, we're fine. And I hate to admit that, but that's what you need to hear because there's value in that.
And speaking of that, and the Fed, I mean, he's going after Powell again after the positive ADP report, which if you look at the numbers, it wasn't that positive. It showed wage growth is slowing.
Depends on what side you're on.
Yeah, and hire and quit rates were at weak levels. It does show that inflation is pulling back still. But he calls him too late Powell. And he said he must lower now because Europe lowered 9 times. And look, Trump does have a point. I mean, inflation is trending lower, right? But when you look at GDP estimates, I don't know if you saw the revised Atlanta Fed, which has a great history of predicting GDP. They now raised their Q2 GDP to 4.6%. From 3.8%. Now, I don't care if you're an economist and you're going to pick that number apart and say it's because of this. It's 4.6%. You can pick it apart as much as you can, as much as you want. I mean, 4.6% is insane, right? For when we were looking and staring down a barrel of maybe recession, 2 straight quarters of negative GDP. We had negative GDP last quarter. I mean, just blow the doors off. And you could say, well, this is tariffs and personal consumption, whatever. It's still it's massive growth that we're seeing, right? That's a headline number that even if you argue, you pick apart, it's still very, very, it's going to be very, very strong. So speaking of the Fed, someone else that's pissed at them is someone who, they're kind of on the same side with Elizabeth Warren. And she was in an interview today because this was after the Federal Reserve lifted the $2 trillion in asset cap placed on Wells Fargo in 2018 and said you can't grow your assets more than this because of all of this restriction. It limited Wells Fargo's ability to grow. It was imposed after the company just decided to create millions of fake accounts. Right? So there's like a 7-year restriction on it. So they lifted it, and she was on TV. She brought up Wells Fargo's record. And I got to tell you, I'm not a fan of Elizabeth Warren, but she brought it today. And she brought it today. It wasn't, I don't like her. I made that clear in the past. I think she's a very angry person. I feel like she hates everything. But she brought it today with Wells Fargo. She's like, the criminal penalties around cheating on customers, investors, and they got caught. And they're supposed to change. And she said, did they change? Because in January, SEC tagged them for scamming on investors again. December, 6 months ago, got tagged again for $800 million scam with Zelle. Last September, got tagged by regulatory for money laundering charges. All of this in the past 9 months. So have they really changed? And CNBC, the anchors were fighting back and saying, yeah, but they have. And he did a great job, the CEO of Wells Fargo, saying how we had the great team and so. But she came out with really good points and said, look, I just want to see the Fed's records on how it came to this decision because we need to know because this is, did you just do this because whatever, if Trump's elected or whatever, the banks, whatever, even though he doesn't like the banks, and Wells Fargo is one of the ones who was debanking everybody along with Bank of America, and several others, large banks. But she brought in great points, but again, targeting the Fed, and remember the Fed, and you have Powell is going to be there till May, and he's gone. And when you have a president that's electing, and their job is to elect the Fed chairman, Trump is going to elect the chairman based on him basically that he could control somebody and say, you better cut and do everything I freaking say you're going to do. And, that's a huge catalyst because, when you're lowering rates, it's going to stimulate the markets. And he wants them to start lowering rates now, which, you could argue back and forth. Yes, you should be doing it because inflation is lower. However, we're still seeing strong growth. So we're seeing strong growth with higher interest rates. So maybe you should wait a little bit. He thinks that growth is probably going to slow sharply in Q3, Q4, the rest of this year. But I could tell you, if you're looking at earnings, they're not predicting that at all because we're supposed to see double-digit growth again, which we'll get to in a minute. But I just want to bring that point up in terms of the Fed because everyone's ragging on the Fed and hating the Fed right now when Powell has pretty much been doing a goddamn good job. That's all I'm saying.
Gosh darn, Frank.
He's gosh darn.
A cuss word.
Yes. So gosh darn.
Well, they should be raining on the Fed.
Job.
Yeah.
And he is. He's doing a good job.
Yeah, right that's in context. You can't just say he's doing a good job without going down rabbit trails. Mm-hmm. However, I will say, and we prove that we can be bipartisan here because I'll have to go listen to Senator Warren's interview, but I agree with her because going back to Wells Fargo and all that, listen, you can't stay in jail forever. Even Michael Vick, okay? Even if you're a dog lover, did his time. Now he's back on TV all over.
Yep.
But a lot of people still hate him.
Yep.
If that's you, I get it. But hey, you do time, move on.
It's a $100 million contract.
Now, Wells Fargo did a lot of shady stuff. Hopefully they got penalized. I don't know what kind of fines they paid. I wish they would all look into the big banks.
Yeah, but she brought up like you got fined because of all the regulatory shit that you did. And you could argue maybe the SEC went after them and they went after everybody.
Which is good. I'm simply saying it's not enough.
Yeah, it should stop.
I'm saying, but the whole revolving door of them screwing over customers, paying a fine, admitting no guilt, no problem, nobody loses jobs and all that. I agree with her. She should take the hammer to them. But no offense, she's the same ignorant politician that is a complete failure. She champions on the back back of the little person sticking up for them and trying to break down the big banks. And all the biggest banks have gotten nothing but much, much bigger. They are more significant to the economy and the globe now than they were in 2008.
Yeah.
It's an utter Florida failure.
I agree, 100%. But I'm just saying that she brought it today.
Good for her on that. Yeah,
and brought up some good points and said, have you really changed? Because we haven't seen it. And I like to see the records on how the Fed came to this decision. And I think that's fair. You know, and for me, looking at it, I always look at seriously, I look at the current environment. I don't care what happened in the past. I don't care who I hate, who I didn't like, who I disagree with. Like, if they come up with good points and it's a great point or it's something that's better than I could think of, I'm always going to say, hey, this makes sense. That's just the way I've been. You got to be able to change. It's not that I like her. I'm not saying like she's, you know, again, I just think she's an angry woman. I don't like her policies and she's anti-capitalism. She brought in some good points. When she was on, I was like, I'm going to listen to this. I'm going to hate it. And I was like, whoa, she's kind of had some good points. Well, have they changed? No, they haven't changed. You're not looking at the credit crisis where all the banks did bad. Yes, they should have threw a ton of people in jail. You're talking about Wells Fargo that created fake accounts. One of the largest banks in the world created fake accounts. And this was after all the stuff that happened during the credit crisis. And they were the biggest in terms of, you know, home lending and stuff like that. Biggest. Have they changed? And she's like, they're still getting tagged for a lot of stuff. And $800 billion is probably a little scam with Zelle. But still, this is a bank that needs to be squeaky clean. And they haven't been. And yet you took those restrictions off, which is very good because now, and all the banks, a lot of the banks have restrictions because of the amount of capital they have to keep in balance sheets. And that's another catalyst going forward. If you're looking at the markets where you're reducing that, it's going to be more. That's what China's trying to do, right? With the reserve requirement ratios and lowering them. You're going to have banks be able to lend more money. That should fuel the economy too, especially with lower interest rates.
If she thinks she's mad now, wait till they change the rules and let them start leveraging up again.
Well, forget it.
And they're going to. And they should.
So I want
to don't bail them out next time. Sorry.
Yeah, it's gonna.
That's all you got to do.
They got to bail them out.
That's the easiest fix in the world. Hey, do whatever you want. When you all go broke, you smartest guys in the room. Go broke.
And that's why I love. That's why you have to. You wonder why crypto is so huge in terms of, you know, a lot of people at crypto and meme stocks. I'm not talking about meme stocks. I'm talking about technologies and finance, of how it disrupts finance, because these guys have made absolute fortunes where they're reporting, the four largest banks, over $100 billion in revenue each quarter.
I think JP Morgan, the best, makes $1 billion a week.
Each quarter. Massive fees, massive amount of money, and total control. And now you have all these technologies, transfer payments, wires, everything through DeFi. You know, the current administration, right? Trump administration is pushing this. You know, there's going to be a lot of disruption in this space because there should be. Because when you have the four largest banks making that much money, you should have competitors coming into the industry to disrupt them. And the current laws never allowed that. They said, these are four largest banks. You can't get bigger. We saw at New York Community Bank that broke into the $100 billion market by getting assets from one of the closed banks. And what happens, they got punished because they had to raise their capital ratios, and the company almost went out of business. For increasing their assets, they almost went out of business. For doing their job and growing their company, they almost went under, right? Because their capital ratios that increased, they had to take that from the bottom line. It looked like there was a run on the bank, and then New York Community almost went under. So the current laws are set up for those four banks to get bigger and bigger and bigger, even though they bullshit and said we shouldn't have too big to fail. They are more too big to fail than they've ever been, and it's crazy. And again, it's all on these politicians' watch that receive tons of money from the banks. And it's pretty crazy. So I want to go over some interesting notes that I'm seeing. And I want to have this be like a segment maybe once a month, because we get a lot of interesting notes. Sometimes we don't get to them. And I want to do like, you know, quick hits here, because we read a lot of stuff. We have access to a lot of stuff that people don't have access to, that we pay a lot of money for, which is cool. And all the research notes, and some of these guys are great research notes. I mean, everybody picks on the investment banks, but sometimes they come out with really good stuff. And we're seeing upticks in what? In two sectors that haven't been doing as well, which is biotech and regional banks. Now, why is that important? They represent a huge part of the Russell 2000, which is down 6% year to date, while pretty much the overall markets are flat to up. And that's a big disconnect. But the Russell is trading at the exact levels it was trading at January 2021, which is insane, right? So there's a lot of money to be made in these small caps that adjusted for higher interest rates, that cut their costs, that don't have too much tariff exposure, because a lot of small companies usually have their operations more in the U.S., so not going to be impacted by supply chains and things like that. Some of them, not all of them, but most of them. So yeah, there's a lot of notes being published on the Russell and how undervalued it is. I wouldn't say to go out and buy the Russell because of that. You probably do well. But there's a lot of individual names within these two sectors, and lots of sectors that are offering value that's unbelievable. Daniel, I covered that, I think, last week with biotechs, and you've been on the trail with regional banks as well.
Yeah, home bank shares, HOMB is the ticker. I would, if you want exposure to this regional banking system, I would do it for two reasons. Number one is the CEO, family-owned bank, or kind of a family-run, big ownership, and they are looking for deals. And if you listen to their conference calls, They are a very well-run bank, very disciplined bank. I love how transparent he is, Frank. He says, hey, we're not going to pay you the highest interest rate on your CDs, but you can always have your money. That's not the way we run our bank, meaning you're not going to get caught in the run-on banks type deal. Also, excluding from the CEO, which I'm a big fan of, I've talked about in the past, Secretary of Treasury Scott Bessent, in previous interviews that we've talked about here, has talked about supplemental leverage ratios being lowered. That's where the big banks don't have to set capital aside to buy safe things, quote, like treasuries. But you're not only going to see regulations and deregulations at the big bank level. Scott Bessent has hinted and even said he wants to focus on more regional banks. He wants them to get bigger and play a bigger role in our our American economy. You couple that with home bank shares. Frank, they did like $1 billion in revenue. $400 million went to the bottom line, made revenue in profits, okay? All they're saying is, hey, we need more money. So I don't know. My crystal ball is a bit fuzzy right now. It's got a hangover, Frank. It's a little bit blurry. But as the summer moves through and we get through the August recess, there has to be, as I expect through the summer, there's going to be deregulations on the financial sector. That's going to spur in the regional bank sections, plus will come up on the next earnings season. But yeah, if you want the regionals exposure, I would buy HOMB immediately.
Yeah, I'm putting up a chart on them right now too. So it's $27, $28, $32 was the $33 almost is the 52-week high. If you guys can see this on a YouTube channel, even if you go back 5 years, it's trading at pretty strong levels. Like this is a bank that is regional, but is a really good bank. And yeah, it's a $5 billion market cap. So I don't know if they're in the Russell. You're going to, Russell is getting very high in terms of that. Remember, the Russell rebalances.
It says they are on FinViz, but I always take that with salt.
Well, they might go into the mid cap now. I don't know what the limits are, but what happens is they just did the rebalancing, and one of the companies that we talk about a lot is U.S. Gold Corp, and we were very happy for them. I mean, this is one of the companies that we're working with on a consulting basis, marketing basis. This is what companies we want to work with, companies that are really great, and we've been talking about this company for a while. We had it in the portfolio at a higher price at like 9, and then it fell down. We added more and stuff like that, but it fell to levels, and we were really pounding the table on it because all mining companies got hit. These guys actually got fully permitted now. Wyoming, great project that I went to go see, and now they just got selected into the Russell 2000, which is great, right? So they did the rebalancing, which I think was the end of April, and they had to have the market cap at a certain level, which we kind of knew. And I love the success of that. I love working with companies like that because these guys work their asses off. I know them very well, the management team, and to see like that's huge. That's like graduation of getting into the Russell 2000. You pay over the counter, and then you get on the NASDAQ, and now you're in the Russell 2000, which is fantastic. But there is the rebalancing going on. This company, I'm not too sure, would move up or whatever. But either way, this is one of the good names, and you're probably going to find lots of individual good names, regional banks, and especially in biotech, which Daniel and I have been talking about, because some of these companies are trading at valuations where it's insane. It really is insane. I mean, really, really good companies. They generate revenue, have more cash on the balance sheet than when the market cap is trading. It's a big disconnect. It's been like that for a couple of years, you could argue, but right now, just with AI and the technology and all the regulatory environment increasing, where you're going to put on labels of food that should not be consumed, which is going to take them out of schools and stuff like that, where you're going to have to label kind of like similar like a tobacco label, like, causes cancer and stuff, tobacco and nicotine. That's going to result in a lot of these companies seeing slower growth, the big pharmaceuticals. So what are they going to do? The M&A market's really going to heat up. You're starting to see that. We said that a few weeks ago. You're going to see a lot of these biotechs, a lot of these companies that have proven technologies. Now they're going to sign deals. If they're not seeing the M&A and the whole takeover, you're probably going to see a lot of these companies invest in their technology, which is going to push those stocks higher. That's where we are. I think if I had to compare it, I would say right now it's almost like investing in uranium companies when uranium was $25 a pound, and it's over 70, went to 100, pulled back to 70. It's kind of like investing in crypto maybe 4 years ago, when it was much, much lower, maybe at 20,000, and it's over 100,000. That's what the opportunity you're seeing in biotech, especially small caps. You're going to see a lot of those names make their way into our portfolio. Just wanted to bring up that note too, because you're seeing a lot of positivity, a lot of positive notes on the Russell finally, and it's been underperforming for a very, very long time. Again, it's at the same levels as 2021. Not telling about a Russell. I'm just saying someone who's studied small caps for 30 years, that's been what I love to do. I'm seeing valuations I've never seen before, and it's pretty crazy. So earnings drive stocks, right? I mean, that's pretty evident when you're seeing that. So earnings drive, especially now. There's a time where you just had to see growth in sales, and now it's like earnings. That's the biggest driver of stocks. I want to go over some things with you because I want to explain to you the difference between people's opinion and data. Because data tells the real story, and it almost always tells a different story than opinions. Like the dollar's going to lose its reserve currency status, and oh my God, the market's going to crash, and yet there's data that doesn't support that at all. Okay, there's data you could say, well, deficit's high. Oh, deficit's always been high. It's the same argument saying since 1970. We're going to see that crack when it cracks, but it hasn't cracked. The bond market's pretty solid. So when it comes to opinions, when I'm looking at earnings, I wanted to show you some things because we just finished reporting Q1, the S&P 500. And now it's in the books. The S&P 500 grew 13.3% year over year. That's an amazing number. And if you want to know why, because on March 31st, the forecasts, okay, when you look at these numbers, so the forecasts of all the investment banks of what they're predicting the earnings are, they called for earnings to grow at just 7.2%. That was March 31st. And they grew at almost double that, which is incredible. Could you chalk it up to AI? Maybe. Could you chalk it up to efficiencies? Could you chalk it up to cost cutting? Whatever. But we're also seeing pretty strong sales growth on that as well. So for 2026, now we're starting to see, because we're in the mid-year, right? So we look at forward earnings, we're looking at 2026. But remember, when you start off at 2025 in January and you want to look at end of the year 2026, that's a long time. So you're saying, you're trading at whatever times forward earnings, right? A lot of times you're taking full year 2026. But now we're going to May, June, right? We're into June now. Now you're looking at 2026 estimates because they're more relevant, right? We're getting closer to that. So a lot of the investment banks are printing that number. And that number right now, the consensus is for over $300 in total earnings. That's if you combine all the earnings together for the S&P 500 companies. We've never been that high. If we're looking back, we broke 200 in 2021, and now in 2026, we're expected to break through 300. So if you do the math on that, which I've done, it means that we grew earnings by double digits annually for the past 5 years. Lots of facts to consider because we had lower rates for most of that period, massive stimulus spending early on, right? 2021, 22, 23. Okay, fine. But I'm going to share this with you because I'm a data person. And often people's opinions tend to be much different from what the data shows. So frankcurzioresearch.com, feel free to email me because I'm going to blow you away with these numbers. So the opinion is stocks are super expensive, right, Daniel? You would say that, right? The consensus is everyone's saying, well, the markets are really, really expensive right now.
That's what the tone from the media is.
I mean, even the media analysts, everyone is saying that the markets are very expensive. They're trading at 21 times forward earnings. If you look at the 5-year average, it's 20. And if you look at the 10-year average, it's like 18.5 or whatever. Again, this is from FactSet. These are all these are estimates. They're super expensive right now. Everyone's worried, how could we be trading at these levels? Okay, that's the opinion. Let's go to the data. The average P over the past 5 years for the S&P 500 is actually 20. It's 20. We're trading at 21 times forward earnings. Yet, if you look at that period, earnings grew 10% annually over that time, over the 5 years, 10%. So now we're trading at 21 times earnings. It's a 5% premium to the 5-year average. Okay, yeah, we're more expensive. But like we've always said all the time, you have to factor in growth. Because not only did earnings grow 13% year over year, they're projected to grow 13.5% in 2026. So you're looking at 10% growth over the past 5 years in earnings. Now you're looking at 13.5% growth, which is 35% greater than the 5-year average. We're growing much, much, much faster. Meaning that if you take it and say, and you factor in growth and look at the past 5 years, we're trading today at a much cheaper valuation based on earnings in 2026. And you may say, well, Frank, who knows if we're going to generate those earnings in 2026? I'm telling you right now, I am 0 for a million trying to tell you that earnings are going to come down. I've said that throughout my career. I said it last time in 2022. I was like, there's no way they're going to, I think it was like set for like $220, $230 in earnings and stuff. And it was, from 210 in 2022. I said, there's no way they're going to meet that estimate. They blew it away. Okay, I said it after the credit crisis. I said it a couple times in between the credit crisis and COVID. Like, there's no way they're going to meet these estimates. Consumers always spend. Companies find a way to beat those estimates every single time. 100%, it's a fact. These companies, they never, unless you have like a black swan event, like 2020, or you have a credit crisis or something like that, they almost always beat earnings. They find ways because it's not difficult to beat earnings. There's so many ways you can manipulate. Microsoft, you're looking at the hyperscalers, they have like 80 different tiny divisions that they can. You look at service revenue and saying, okay, service revenue got cut for Apple. They can literally raise their prices by 10%. You can't leave, right, unless you don't want your pictures anymore or anything for cloud. They can raise their cloud prices and easily make their earnings. All the contracts with defense companies, they come in. It depends when they're going to recognize that revenue. It's a 3-year contract. Well, this quarter's not doing that good. Let's recognize more of it in this contract. This way they beat earnings. There's so many ways to manipulate earnings. It's insane. So, but just looking at the data and you're factoring growth, the S&P 500 is much cheaper today than it was over the past 5 years. That's based on the data. I know opinion, you're going to say you're crazy. I'm just telling you. If you're looking at the facts and we meet that estimate, and you might say 13.5%, Frank, that's crazy. We just grew 13.5% year over year. It's not crazy. It's almost the same though. We grew 13.3% over the past 12 months. The next 12, they're projecting 13.5% growth. And will AI be factored into that? Maybe, but we're also going to see exceptional sales growth, which is projected. I think it's 6-7% sales growth, which is much higher than industry average. So Do I think we'll hit that 300 number? I think we'll blow it away, only because I've been wrong 100% of the time, saying, no way, they're not going to grow that fast. These companies find a way to do it every single time. Consumers always seem to spend in America. They just love spending money, even money that they don't have. They continue to do it. I know it's going to blow up in their face. I've heard the same story since 1979, right? 80s, 90s, it's going to blow up. Holy cow, Dow's going to lose reserve currency status, all depression, all this stuff. We hear it over and over again. Markets continue to go to all-time highs. Every single time they pull back, it represents a buying opportunity. Until that changes, like Daniel said earlier, when it comes to China, if we announce higher tariffs on China, we're going to see the market pull back considerably, start buying a lot of names, because that has to change. That's not going to be the norm. And she will definitely come to the table, and Trump will come to the table and say, okay, we got to figure this out again. So when you're looking at earnings, which we do, and we look at the numbers, you look at the data, I'm just telling you, based on the data of what I told you, you can email me, frankcurzioresearch.com. I know you're going to say, Frank, you're crazy. Don't blame me. Just look at the data. The data shows it, that we are cheaper right now than we've been in the past 5 years. So if you think stocks are expensive, you hear that on TV all the time. Now you can tell those people, you know what, you're full of it, and here's why they're not expensive, based on the data. And that's what you want to focus. You want to let the data make your decisions for you, because it takes the guesswork out of it. So if you don't want to invest in S&P 500, you think it's going to pull back for tariffs, that's fine. But if you're not investing because you think we're super expensive, we were more expensive over the past 5 years, and we've watched the market absolutely surge since COVID, absolutely take off since COVID. So not only that, what do we have down the line? Less regulation, more tariff announcements coming. We had the playbook where the Middle East was the greatest spectacle like we've almost ever seen when it comes to politics. They had the American flag on the buildings and stuff like that. I don't think so many people understand what happened in the Middle East, where Trump took the greatest companies that we have, especially the hyperscalers, and they're building right now the biggest power plant the world has ever seen in Saudi Arabia. And we're looking at 5 gigawatts, which is freaking insane, right? You have Microsoft going into nuclear, and SMRs are like, well, they're going to generate maybe 150, 200 megawatts, right? So megawatts. This is gigs, 5 gigs we're talking about, right? So this is massive upon massive, like we've never seen anything like this. And now you have all hyperscalers all going to get this business. So if Europe follows suit, if all these, now you have Europe, you have China. This is what's going to happen. If we all work together, we all use, you have companies, you have profits, everyone's working together. It's good for corporate profits. It's good for the companies. It's good for each country. It's good for GDP. Again, we have the playbook for the Middle East. That's very favorable, along with favorable banking regulations are going to reduce a lot of those requirements. There's a lot of stuff. Also, a lot of the red tape is going to be removed from projects that we want to build, especially construction, mining projects and things like that, where they don't have to take 15, 20 years anymore. There's a lot of positives coming up with a market that's not as expensive as everyone believes. I'm not saying it's super cheap. I'm just saying if you think it's expensive, it was more expensive over the past 5 years, and we saw the market ramp higher because the growth was there. We're seeing massive growth. We're expecting growth to continue over the next year. If it happens, the S&P 500 is going to continue to ramp higher.
We're not glossing over the pain and the pullbacks and the fear there. We took some lumps, but we were recommending. And remember, the diversification there is easy. It's stocks, Bitcoin, and gold. That's the simplest. I mean, we've been preaching that for as long as we have. So that's the key takeaway there. That's how you hedge against all the craziness that you're going to read about 24/7. And that's okay. Just don't let it stop you just don't let it make you sit on the sidelines and miss out on everything.
Yeah, no, definitely true. Definitely true. A couple more headlines here, in the news and stuff to be able to talking about. Bank of America says Robinhood is going to be the next company to get into the S&P 500. I thought that was interesting. This is ahead of a June rebalance that they do. It's not like they do one rebalance every year. They can get companies in there all the time. It's not like the Russell where rebalances once a year. No matter if your market cap goes from 100 million to 25 billion, you're going to stay in the Russell for a full year until June. S&P, who do we see just go into the S&P? I won't mention it. Who's the last company that went into the S&P?
Coinbase.
Yes.
Oh, because of that, yeah. I knew he was making fun of me, but I couldn't figure out why.
Someone emailed and said, I love Daniel. He's so awesome. Like one of our good contacts, our crypto contacts, this guy, Brett is a really good guy. And he's like, oh, man. He's like, I love Daniel. He's like, man, freaking a couple days later, went to S&P 500 and it took off. I think it pulled back since then, but it was just, and we sold it. And
I'm
it was
thinking
funny.
about The Hangover. Where
yeah.
it's like,
you're
too stupid to insult. Like,
no, that was just, that's fine.
No, but I knew you were giving me a hard time. I was like, what are you doing?
So, with Robinhood, they say Robinhood's probably going to be the next one to go in there. If you're looking, it's trading at $72 right now, and you're seeing massive buying of the June 75 calls now. Because Bank of America came out with this report, it's trading, it has a market cap of $63 billion and trading at an all-time high. And credit to these guys. Yeah. I mean, you want to talk about how you disrupt the markets. I mean, these guys were incredible in saying, hey, we're giving all this stuff for free. You have free trading. And we understand, with Citadel and behind the scenes, they're taking it. But people don't care about that. They don't. Just like people don't care about you not getting equity in a lot of, almost every single token that you have that trades on Coinbase, right? You're not getting equity. People don't care. So if people really don't care about that or what they don't see, it's fine. Because I could tell you, if I go to get an oil change and say for a truck, it's like, $100, say $120, whatever it is. I like paying that, and I'm okay paying it. But you know what I did hate? I hated that they charged extra fees, like 2 or 3 extra fees. And I'm like, what are these for? And they couldn't even, that pisses me off. So they did something that a customer really doesn't care about, but they're going to care about getting free trading, even though, on the side, they're getting a little bit worse of a price, which is, at the end of the day, it's pennies. On the scale, it results in a lot of money, but it forced the whole entire industry to change how they do business. And then Robinhood said, hey, we're also offering crypto. Now you're going to see Schwab off of crypto. You've seen everybody else off the crypto now. Now you're going to be able to buy not just Bitcoin and Ethereum. You're going to be able to buy lots of crypto names, which is why in our crypto portfolio, the next 100 cryptos are going. That's where you see the opportunity for 5x to 20x gains. And I'm not even kidding, 20x. We've seen 40x gains in our portfolio when crypto turns. We've seen names that are up 50% over the past 30 days. Right? Because it's filtering down as Bitcoin goes higher. You're seeing a lot of that money filter down to a lot of these great technologies now. And the next 100 are real companies. And, they have amazing technology and good services. They have good token economics where they burn their tokens, and they have good communities where you constantly, again, it's only the value of the utility. That's where the value of the tokens comes in, of these cryptos. Like if you're using the crypto for something, like if you use it for trading opportunities on Binance, that's where you see the biggest effects. These things are still down 80% plus. Now you're seeing these things really take off, and just Robinhood, credit to these guys. I mean, you want to talk about disrupting an entire market, $63 billion market cap, all-time high. And according to Bank of America, look, I don't think they put out a note if they didn't think that was the company that's going to go in. I'm sure somebody has a contact someplace. But if it does go in, you're probably going to see this thing take off. And a lot of people are playing it through option markets, but that came out today. I thought that was an interesting note.
Yeah, this is a frustrating one for me. I've liked this. I've just watched it go up. To your point, Frank, I've listened to Vlad, the CEO, on a couple of recent interviews. He was at the Bitcoin conference. And I have to say, the more I listen to him, I don't trust him, but I like him more from a business standpoint. And the reason I say that is because, Frank, if you're a redneck like me, there's not much difference between prediction markets and betting markets. But oh boy, is there when you get down to the nitty-gritty and loopholes. And I understand that, and I'm okay with pressing the line and trying to figure out and get the best situation for your company. But I have to say, the way he pushes the line, I have to respect that. And at a quick glance, like I said, the breakdowns between betting and predictability, Frank, are for a lawyer's wet dream. And they can have fun with that and make a bunch of fees. I just think I've been wrong about this hood. I think it's going to continue going up because I haven't bought it, and therefore it's probably going to hundreds.
Yeah, I know. Well, I mean, the last company...
that's big fundamental analysis, I know, but that's reality, people.
Yeah, and the last company we said, Daniel, it's going to go...
No kidding. That's
CoreWeave. CoreWeave were like, hey, it's $60. This company should be 100. Went to 100 5 days later. CoreWeave is now trading at $154. Getting more in line with their backlog and their sales, trading time sales. Right. So, in terms of their market cap, where's their market cap now? It's $73 billion. So, 20, 40,
is it
60.
Still down? Is it up today again? Or hopefully it's down. Isn't everything pulling back?
It's up. It's up 2% today. So here's a chart. So it's trading at 154. Again, this is like 2 weeks ago. We were saying, listen, buy this thing on that pullback. And hopefully a lot of you listened. Look, we don't always get it right. This one we really got right. I mean, you could be going, well, Wrap Technologies, Frank, is down. We've held that one for a while. And I still am a big owner of that. And I think things are going to change completely in for the rest of this year and where they're going. And they're putting out some really good news and have finally got the team in place. But I like to bring up losers and winners. But, CoreWeave, if you want to buy me anything, a house or anything or something like that, that's fine. I think if you say that on the air, they're probably like, what do you get? Don't ever buy me anything. I'm just kidding, right? This is a free podcast. Don't. So just, contact, send me information and stuff like that, because everyone that listens to this in so many different industries, and, this podcast gets downloaded in 140 countries. I mean, our numbers are really staggering and going higher, and I appreciate that, everyone listening to. So it's really great to see. The reason why I do this is for the CoreWeave. If we see disconnects in the market and you make money, that's all. That makes me feel amazing. That's why I love to do what I do. Okay, it's not about, oh, well, I made money on this or you made money. I love to see everybody making money on this thing. And CoreWeave going to 150 is insane. And you're looking at what? They have pretty much $30 billion in sales. So I would say this should be trading at a $90 billion market cap to compare to a lot of other companies. If you're saying 3 times sales, some of them trade 10 times sales. 3 times sales is still kind of conservative. They have a $74 billion market cap right now. That puts it at $90 billion. So, if you're looking at doing the math, this thing could go to 200 pretty quickly too. So, and they're signing more and more deals all the time. These guys have technology. They have proprietary technology. They have access at scale to NVIDIA's best chips, which every single hyperscaler who has hundreds of billions of dollars is spending on the balance sheet. And not only that, we just saw no I mean, when you look at spending, it's not slowing. My contact, it's not slowing. It's not slowing at all. It never has slowed. It really hasn't slowed. And just now, over the wires, Amazon is investing, I think, something like $10 billion in North Carolina or something like that. I think it just hit the headlines a little while ago. So as we're talking right now, so for data centers and stuff in North Carolina, which is becoming a big hub for data centers as well. So, I mean, it's not slowing down anytime soon from the hyperscalers. They have to continue to spend, like we said, to compete against each other. Because if they don't, you're looking at companies losing $1 trillion in market value, and that's why their system continually to be updated, continue to be the best. And you're seeing that. You're seeing this fight. If you look on the leaderboard list of the best systems, whether it's Anthropic, right, or if it's Llama, or if it's ChatGPT, now it's Gemini, right, 2.5. They're constantly changing. They're getting better. They're fighting each other, competing against each other. It's what you want as an investor, to have the best systems, to be able to use these systems, have the best efficiencies, which is going to result in productivity gains for your company, higher profits, high numbers, less costs. And these guys are going to continue to fight to get the best system out there. They have to, or they could lose a ton of business, which is going to hurt their market caps. And you talk about 4 or 5 companies that have $1 trillion market caps that are fighting for this market. And that's not slowing based on my contacts. If I see it slow, I'll let you know. It's not slowing. You're seeing more demand than ever. And constantly, this news flow, CoreWeave continue comes out. It's pretty amazing. And now, Amazon spending $10 billion in North Carolina. It just came out over the headlines now for data centers in North Carolina. So
it's absolutely amazing. One quick comment on the spending not slowing down anytime soon. Jamie Dimon, I'll unpack this a lot more in future podcasts, but just had an excellent sit down at the Reagan Economic Forum or whatever it is. And he talked about the spending on AI, and he said, it's not slowing down anytime soon. And he was like, 300 billion, 400 billion, whatever it is this year. And he made a great point. And he said, listen, technology is always deflationary, but AI isn't going to be deflationary anytime soon. And the point is, Jamie Dimon is my favorite bankster. I mean that as a compliment. The point is, he's always calling it out as he sees it. And hey, I think inflation could still, rear its ugly head, and stagflation and all that. But the point that he's saying that with AI, I would take a listen. And just to your point on CoreWeave and being hands down the absolute player, look at the momentum that they're causing, Frank. Did you see Applied Digital Corporation? Will you pull up APLD, please? Not to put you on the spot. APLD. If you look at this chart, you could probably notice in the recent days, it's really rallied because they signed a deal with CoreWeave, and it just shows you the idea on how powerful CoreWeave is in the sense of, hey, these guys, if CoreWeave's involved, since they're the leader, they're giving a lot of people some hell of a boost.
In April, this stock was under 4, okay, and it's almost $13. If you're looking at the chart,
another 24% today.
Yeah, just look at not even a month. Wow, look at the 5-day. The 5-day. You're looking at, not even just since the second, right? So what is this, like 2 trading days ago? You're looking at the stock was 7 and it's 13 basically. It's up another 25%. So you could have made money just off of the last day or two and bought it after the news at $10, and now it's 13. Same with CoreWeave, right? The news came out, and I'm like, wow, this is a big disconnect here. It should be trading higher, and all of a sudden it started really ramping higher tremendously, and people are like, wow, these guys have basically $30 billion in guaranteed deals that are in the pipeline. And you're trading that market cap that was lower than that, right? And people looking at the debt, and the CEO came on TV and said, listen, we only take on debt once we sign these contracts. So we sign a contract for 200, we're taking on 100 in debt, and then over the life of that contract, it takes a year, 2 years to really get everything to them. Then we pay off the debt, and then we have our profits. So that's now it eliminates that debt concern that people were worried about, where holy shit, you've taken on a lot of debt, where this debt is really short-term debt, which is really cool. And the CEO did a great job explaining that. Once that interview came out, that's when I thought the stock was really going to freaking take off, because that was the only risk that people were concerned about. The stock went up like 6-7% after earnings and then fell for the day because people were concerned about debt. He got on TV, I think, the next day and said, listen, this is why this isn't concern. So what's the concern? Nothing. Now you have pure growth. You basically took the risk off the table for this company, saying every single company in AI is trading at a massive premium, where it's 3, 4, 5, 6, 7, 10 times sales. This company shouldn't be trading below 1 time sales, especially since they have proprietary technology and access that really no other company is going to have access to, which is to scale NVIDIA's best chips that are in massive freaking demand, right? That people can't get. This company could get for some reason. So, if you think about it, and you look at the numbers, you look at it, again, looking at the data, it just made sense. It's going to go a lot higher. I wouldn't have bet it was going to go to 150 in 10 days from 50, but I'm glad because people are doing very, very well in that stock, and it's been a big winner for us. So, but yeah, Applied Digital, wow, look at that freaking chart. This is 5-day chart.
And the power that they're supplying will kick in at the end of this year, the first tranche. It was 2 15-year deals, I believe.
Yeah. So I think we'll end with this. You want to talk about the Circle deal, the Circle IPOs. They have a price range. I think it's pricing tonight, coming out tomorrow. Expected valuation around $7 billion, $7.5 billion, I think it is, and offering 32 million shares. Expected to raise around $900 million. That's if it's priced at $27.50. And listed on the New York Stock Exchange, symbol CRCL, and that's going to come out tomorrow. Let's see, because a lot of these IPOs, we even saw eToro take off, come back down. Newsback take off, come back down. We saw CoreWeave take off and come back down, but CoreWeave has taken off. That's what you want to look at these IPOs. Like, is this different? I don't know. It's not really like an AI trend. It's more banking, interest rates and stuff like that, and taking advantage of it. But let's see where this one goes and where it opens. It's going to open at 30 or 40 because the past IPOs, I feel like people have missed, where it's come down and people are like, oh, I'm going to stay away from CoreWeave or whatever. But I think I'm very interested to see how this trades after it opens over the next week. I'm really interested to see how it's going to trade because I really have no freaking idea because some have come down tremendously. You know, others like CoreWeave has gone up after the IPO, took a couple weeks after that or a couple months. But I'm interested to see how it opens. The strength of how it opens should be pretty positive. But what happens after it opens? So you're going to see, a little bit of a sell-off or lots of buying. I'm curious.
I feel the same way as I did on CoreWeave, which I was very nervous about this. That means it's going to go to the Florida moon, Frank. Because I'm thinking, I was looking through this, and I think I was telling you, I mentioned on a podcast, it's basically an interest rate play. They didn't make any money because they're disrupting it. They don't charge high fees. But in 2022 is when their income really started to shoot through the roof. That's not a coincidence. That is when the Fed started raising rates, and they basically are making interest off of all the money slushing around on their stablecoins. However, that's why I thought, man, that's a great business, but it's more one to watch, not invest in. I was dead wrong on the CoreWeave situation because essentially I thought, man, if they don't buy these GPUs right, Frank, in my opinion, you're betting on the management team, and you got to see how long these things are good for. Is the shelf life 3 years or 6 years, whatever? But my point is, I was dead wrong on that. Look at the stock. Let it tell you what it's doing. Let the market dictate that. The same with Circle. Frank, I think, and I could have egg on my face and we could be dead wrong on this thing if it tanks. I think the stablecoin story is and could be so massive that it's going to gather that momentum because it's the first one. You got Tether, but that's not public. I think there's such an amazing story here, Frank, that if they get this thing out, they're decent at storytelling. And I'm not saying I don't mean storytelling as in making anything up. I just mean sharing the impact that stablecoins can have, the drive that could save the US dollar in a sense, make a demand for treasuries, push yields lower. You get momentum like that, plus making deals, and literally, Frank, you're headlines away from, hey, stablecoin is now issued on XYZ platform, and XYZ is going to use stablecoins and blah, 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 blah. I don't see how that's not massive. So I think this is going to be an exciting thing to watch, and I would bet higher than lower.
Yeah, this is going to, it says it's coming out at $7.5 billion valuation. This has the opportunity to become a $100 billion company. Just with the biggest banks in the world holding conferences and calls about stablecoins and how the growth in stablecoins. And these guys are the issue of USDC, designed to maintain a one-to-one peg with the US dollar. But this is a play on DeFi, payments, lending, I mean, just the decentralized infrastructure, just, everything coming together. So it's like the fintech compliance. And now that you have the administration that's there and you have all the biggest banks in the world talking about stablecoins, this is almost like that pure play on this. So if you really believe that stablecoins are going to, this is like the pure play here on it. It seems like it's going to be a massive market because it's rare that you see, I wouldn't say rare, but, and again, I didn't have time because I've been so busy and people who were on the call with the stablecoins and Citi's announcement of it, and they just had a massive report on it. It was a very, very big deal. Talk about how big, trillions of dollars of how big this market's going to be. You're seeing that across the board, and banks are very serious about this. So now you have the regulation in place, and no one's going to come after these guys just because they don't like them or because they didn't donate to the right party. Now that you have a framework around it, that's why they're going IPO now. They didn't go IPO a while ago, because if you don't have the regulatory environment, who's going to invest in this when the government can turn around and just sue you just because, hey, you know what, that guy has red hair? Yeah, we're going to just sue him. That's the way the government operated, the SEC operated, right? It was just like, who paid the SEC the most money, who was lobbying the most, and that's who we're going after. That's what it was, right? And the banking industry paid them so much money that they just tried to shut down completely the entire crypto industry, which is amazing because all the crypto companies, even Novogratz, you're looking at Robinhood, you're looking at all Coinbase, they were all working with the SEC and saying, we want something. We gave you 4 years. Could you just tell us, even if there's tough regulations, just let us know what the regulations are. This way we could structure our companies because we're seeing massive demand and people want this. And the SEC out of nowhere just said, hey, we're really going after these guys. They work with them. They did everything that the SEC said. And then they went after them and tried to sue them. And that's why you saw some of these guys fight back and say this is bullshit and the Winklevoss. That's how come you saw this massive push from Democrat side and all these donors go all the way over to the Republican side, because we're like, this industry right now, the Democrats are targeting this industry. They don't want it to exist. And now with Trump in there, I mean, this opens the door. That's a big part of the Circle IPO here. So it could really, really take off. I mean, the growth in this industry is amazing. And this is a pure play here. I'm interested to see where it comes out. It might be a good buy. I might even buy it myself. But let's see. Let's see how the IPO prices first. It could price at $60, could price $50, could price whatever. Let's see what it prices at, because they are coming out and the pricing is supposed to be around $27.50. I'm going to bet it's going to be a lot higher than that. I'd be surprised if it's lower than that.
In my opinion, the only headline you need to pay attention to is the big banksters, JP Morgan, Bank of America, Citi, and all those guys are looking to team up on a stable coin. If they would go at it alone, they do not like to use each other if they don't have to, which is good for competition. My point is that those bastards, God love them, would not join up if they didn't see a major threat. So let's see how Circle goes.
Thanks so much for listening. Again, thanks so much for the support. If you want to rate our podcast, you can go to iTunes and rate our podcast. That's great. We really appreciate that. We don't ask anyone to really do that often. We just love the word of mouth that's spreading right now, and people just come to this podcast. We love providing you guys lots of ideas and stuff. And also, the premium version includes Wall Street Unplugged Premium, which Dan and I tape every Thursday, and it includes recommendations. We have a portfolio around those recommendations. It's only $10 a month, but we really dig into more than just talk about general themes. We really give a lot of stock ideas and stuff like that, and that's been worth it for a lot of people, because we'll share sometimes 10, 15 ideas, and then we'll even take one idea and throw it in our portfolio. It's a trading idea of what we like, and that portfolio has been doing very, very well. So, questions or comments, we're here for you. FrankCurzioResearch.com. Daniel, email?
Daniel at CurzioResearch.com.
All right, guys. We'll see you tomorrow. Wall Street Unplugged Premium. Take care.